Same day. How weird is that? Mark Bristow and Tom Palmer both exiting the two blue chip go-to gold mining stocks as gold hits another record, seemingly on a daily basis here. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and yes, indeed, we do have a new record in gold, $3,857.90 on the CNBC COMEX futures. We had Gareth Soloway on the show a couple of years ago. There's something to be said, as he says, about these even numbers, and $3,900 providing a kind of temporary top before actually taking a bit of a dip here straight down to $3,850. Let's just take a quick look at silver. $46.75 per ounce on the COMEX futures on CNBC. So we are approaching record levels in silver. We are less than 10% away, the record being around $50. So let's get to this big story here. Again, we have both Mark Bristow at Barrick and Tom Palmer at Newmont exiting on the same day. Pretty weird in a sense. So let's take a look at the press release here from Barrick. Barrick announces leadership transition. Mark Hill appointed Group COO, or Chief Operating Officer, and Interim President and CEO. Search underway to identify successor, President, and CEO. It's amazing to think it's been 7 years. I mean, I remember when Mark Bristow became president of Barrick. It was part of a new era. So let's take a quick look here. Barrick Mining Corporation today announced the company's board of directors has appointed Mark Hill as Group COO and Interim President and Chief Executive Officer, effective immediately following the departure of Mark Bristow. Mark Hill, who is currently responsible for Barrick's LATAM and Asia-Pacific regions, is a seasoned mining executive with 30 years of experience. He joined Barrick in 2006 and has experience in strategy, corporate development, and leading major projects across the world, and was also integral in the initial decision to undertake exploration at the 4 Mile Gold Project in Nevada. The search committee of the board, chaired by Brett Harvey, has embarked on a process with the support of a leading executive search firm to identify a permanent president and CEO. So here's the explanation, which is somewhat lacking, one could argue. And I do have a theory or two, which does tend to overlap with a lot of what's being said here. Mark Bristow is stepping down as president and CEO after nearly 7 years, having joined Barrick following Barrick's merger with Randgold in 2019. Mark Bristow led the successful integration of the two companies, and during his tenure, made significant investments in Barrick's world-class assets to better Barrick's position to maintain profitable gold and copper growth. Since the merger with Randgold in 2019, Barrick has returned $6.7 billion to shareholders and reduced net debt by $4 billion. Most recently, the company delivered solid Q2 operational performance, strong cash flows, an enhanced quarterly dividend, and strong share price performance. John Thornton, chairman of the board, said, quote, "On behalf of the board, I want to thank Mark for his leadership of Barrick. During his tenure, Mark strengthened our portfolio and helped position Barrick as a leading global producer of gold and copper. As a result, the company is well positioned for the next phase of our growth and value creation for all shareholders. We wish Mark the very best for his future." And then Thornton continues, "We are delighted to welcome Mark Hill as Group COO and Interim President and CEO. His caliber, experience, and deep knowledge of the company will ensure we maintain momentum. The board is committed to both finding the right leader to fully capitalize on Barrick's world-class assets and capabilities, and to driving improved performance, growth, and shareholder value," added Mr. Thornton. Now, it's interesting. There is no quote from Mark Bristow, and really there is no explanation given. So what can we infer from that? It would seem to suggest that perhaps, and we don't know, again, this is pure speculation, perhaps this wasn't as much Mark Bristow's decision as the board. That is one interpretation or inference we could make to speculate, and emphasis on speculation here. And the other question I wonder to myself, the first reason I thought to myself, the cause of this event, I'm kind of back to Mali. And we can't forget that Mark Bristow is wanted by authorities in Mali. And so one wonders if Mark Bristow is, in a sense, compromising the ability to retake charge of that mine, and the mining license is up for renewal in February 2026, as we're going to learn. So they're running out of time. And can they negotiate with someone who is wanted by the Mali government on what we could, I think, fairly assume to be spurious charges here, but who have shown to be completely intransigent in their negotiations, as we've seen with the 4 individuals from Barrick that they have detained, who are allowed to be, released on bail by the judge, which the government was appealing this release. So one wonders if this is just raw pragmatism and saying, we like Mark Bristow, we think he's doing a fabulous job, but if we want to have a shot, even at retaking the Loulo-Gounkoto complex, he cannot be at the helm. And there may even be a humanitarian side to this as well, which is that perhaps Mark Bristow himself feels that he is reducing the ability for these people to be released by, in fact, being at the head of the company, and perhaps he himself feels that he has to get out of the way in order for their release potentially to be secured, whom he probably feels some responsibility for as CEO. So we might call that loosely the humanitarian theory. So let's see what people are saying here. We have a big story from Cecilia Jamasmi at mining.com. Mark Bristow's shocking exit shakes up Barrick leadership. And she quoted some analysts here. The leadership shakeup drew surprise on Bay Street. Alexander Hacking, an analyst at Citigroup who covers Barrick, noted that Bristow had previously said he planned to remain until Reko Diq, the company's massive copper-gold project in Pakistan, began production in 2028. I remember that. There was already discussion of the next phase after Bristow, but it did come sooner than expected. And here's a quote from Alexander Hacking, analyst at Citigroup. Quote, "One question is whether this will lead to bigger changes at Barrick. A new CEO would bring a new strategy in Mali, at Reko Diq, or for the portfolio. Barrick's particular mix of assets is arguably holding back its valuation." Analysts at BMO Capital Markets noted that the media reports have historically spoken about succession planning for Bristow. Quote, "But this is clearly an abrupt transition," Matthew Murphy wrote on Monday. Another theory or dynamic we could argue, and maybe all of these dynamics are at work, to be extra speculative here, is as the gold price hits record levels, one could argue, ambitions at the company may see other people want to replace Mark Bristow. I mean, we have to also consider there may be an internal power struggle as a gold fever may be starting to take hold out there with these elevated prices and the profits and the money. It's something we have to consider. Again, I stress here, all speculative. And finally, TD Securities analyst Stephen Green called the news, quote, "unexpected," adding that Bristow's exit will be viewed by investors with mixed emotions. Indeed, it does seem that he was overall righting the ship, and his move towards copper doesn't seem to be an unpopular decision, which brings back the notion of Mali and the Loulo-Gounkoto complex, and perhaps that was a vulnerability when we consider a potential power struggle within the organization. That also has to be considered. Now, Reuters put out an article this morning on September 30th. Exclusive. Mali mining dispute proved last straw for Barrick's, quote, "mercurial Mark Bristow," sources say. Now, this is quite an angle. I've never thought of Mark Bristow to be, quote, mercurial. Someone who is kind of hot-headed and changing his mind. I mean, mercurial is often the adjective or the word that is attributed to Donald Trump, someone who changes his mind, kind of hot-headed. I have never been given the impression from the interviews I've seen with Mark Bristow, some conducted by the Northern Miner, that he is mercurial. And even the way this headline is written, Mali mining dispute proved last straw, as if he ran out of patience on the whole matter and just had to leave. So one wonders about these sources. Are we going to learn who the sources are? This is Reuters. Mark Brissow's handling of Barrick Mining's flagship asset in Mali proved to be the last straw for the board to initiate a change in leadership, according to 4 people familiar with the development. In a surprise move, Barrick's chairman John Thornton on Monday announced Chief Executive Bristow would step down immediately and appointed Chief Operating Officer Mark Hill as interim CEO. Barrick, which gave no reason for Brissow's departure, said it has initiated an executive search and will announce a permanent CEO in due course. A discussion on replacing Bristow actually began at least 6 months ago as the company's situation worsened in Mali under his leadership, according to one person familiar with the board's thinking. In the last 9 months, Barrick's lost control of the Loulo-Gounkoto gold mine complex in Mali and had 3 metric tons of gold seized by the government. The company took a $1 billion write-off and sold 2 of its mines in the US and Canada. Barrick's future in Mali remains uncertain as the company's mining license comes up for renewal in February 2026, and if an agreement is not reached before then, Barrick could completely lose the asset, according to people close to the Mali government. Neither Barrick nor Bristow responded to requests for comment on this story. Scrolling down, a personality clash between Thornton and Bristow also contributed to Bristow's downfall, according to a former Barrick executive who did not wish to be named, who described the relationship between the chairman and CEO as tense. Bristow's sometimes abrasive style led some of his industry peers to call him Mercurial Mark. Bristow had a reputation for making key decisions himself and got rid of a weekly staff meeting, the executive added. Some investors have had concerns regarding the company's geopolitical risk profile, including its exposure in Africa and a planned investment in Pakistan at the Reko Diq project, Jefferies analysts said in a note. Shares of Barrick closed down 4% on the Toronto Stock Exchange on Monday. So turning over to Newmont now, let's take a quick look at the press release. Newmont announces retirement of CEO Tom Palmer, names President and COO Natasha Villajone as successor. And this is September 29th, the very same day. Newmont Corporation today announced as part of the company's long-term leadership succession planning that Tom Palmer, who has served as Chief Executive Officer since 2019, will resign from its board of directors and as CEO on December 31st, 2025. So unlike Barrick, where Bristow was replaced immediately, this is a retirement. Natasha Villajone, President and Chief Operating Officer, will succeed Palmer as President and CEO and will also join the Board of Directors on January 1st, 2026. Palmer will serve as Strategic Advisor until his retirement on March 31st, 2026, to support a seamless leadership transition. So you don't get the sense here of the same internal squabbles, so to speak, going on within the company. Whereas at Barrick, it's not like we're hearing that Mark Bristow is now joining the board and is now going to be helping advise the new CEO as they come in. So a little less drama, we might say, at Newmont. And here we hear from Tom Palmer. So it's a pretty interesting exercise in comparing and contrasting, isn't it? Here's the quote. After 12 years with Newmont and almost 40 years in the mining industry, it is time for me to retire and hand over to Natasha to lead our company through the next chapter in its storied history. It has been a privilege to serve as CEO of Newmont. I thank our board for its guidance and partnership throughout my time in the role, our executive leadership team, and all of our teams across the world for their support in shaping our business into the industry leader it is today. I am confident that Natasha and Newmont will seize the many opportunities that lie ahead for our business. So that is Tom Palmer, who is continuing to be CEO until December 31st, 2025. So a much different situation over there. So one wonders here as well, with gold hitting, nosebleed levels here, that this is also perhaps an opportunity, say from Tom Palmer's perspective, to go out on a high note as we're approaching $4,000 an ounce. Let's announce the retirement. Look at what we're doing as a company. So quite a different situation, isn't it? So continuing on. CNBC, gold hits record high set for best month in 14 years on Safe Haven Rush. This is Reuters via CNBC. And let's look at the causes here quickly, because we've seen in previous episodes there are several factors that are being attributed to the rise in the gold price. Gold prices rose to hit a fresh high on Tuesday and were poised for their best month in 14 years as fears of a potential U.S. government shutdown, so a new reason, and growing expectations of further U.S. interest rate cuts boosted demand for the safe haven metal. So interesting, a government shutdown is now being added to the litany of reasons that are now being given for this rising gold price. And we have a quote from KCM Trade Chief Market Analyst Tim Waterer. Quote, "The looming government shutdown creates a haze of uncertainty over the market, which has served to accelerate gold's gains. The $4,000 level now seems a viable year-end target for gold, while market dynamics such as lower interest rates and ongoing geopolitical hotspots keep working in favor of the precious metal." And then we have mining.com. Gold price soars to new record on U.S. government shutdown. And this is by a staff writer at mining.com. And we have a quote from David Meager, Director of Metals Trading at High Ridge Futures. Quote, "Safe haven demand focused on the potential U.S. government shutdown is one of the driving factors behind this rally. The dollar is under some light pressure in response to that, certainly supporting the precious metals complex." And we also have Barclays strategists saying in a note on Sunday, quote, "Bullion doesn't look overpriced relative to the dollar and treasuries, which ought to contain a level of Fed-related premium, given the nature of the risk from the central bank's potential loss of independence. This makes it a surprisingly good value hedge." So now the independence of the Federal Reserve is being added to the many reasons here. So continuing on, Zijin becomes world's number 3 miner after reaching $100 billion valuation. This is by staff at mining.com. China's Zijin Mining Group has become the world's 3rd largest mining company by value after surpassing $100 billion in market capitalization for the first time at Thursday's close. The milestone places Zijin alongside global heavyweights BHP and Rio Tinto, which closed Thursday with market values of $140 billion and $111 billion respectively. So Zijin Mining joining the elite there, of course BHP being the largest mining company in the world and Rio Tinto the 2nd largest mining company in the world. So here, just a little bit behind comes Zijin Mining Group. And the spin-off, Zijin Gold, we have a Financial Times headline, Zijin Gold shares surged 68% in Hong Kong trading debut. So Zijin Gold, the spin-off from Zijin Mining, has a market cap of $40 billion. Not bad at all, when you consider Zijin Mining is $100 billion. And as David Wilson, a director of commodities strategy at BNP Paribas, said in this FT article, quote, "Every element of uncertainty that is traditionally supportive for gold is happening at the same time." Tavi Costa, macro strategist at Crescat Capital, said there had been, quote, "explosive moves in the mining industry from depressed levels." Quote, "The big change here has been the fact that metal prices are substantially higher than the structure of cost for most of these miners." Indeed, if you are getting $3,800 per ounce for your gold, you can have pretty high costs. So continuing on, some important developments in critical minerals. We have an exclusive from Reuters, this on September 24th. So last week, G7 weighs price floors for rare earths to counter China's dominance, sources say. Group of 7 members and the European Union are considering price floors to promote rare earth production as well as taxes on some Chinese exports to incentivize investment. 4 sources with knowledge of the discussion told Reuters. And we have a quote from one of the sources who said after the Chicago meeting, quote, "The heart of the conversation was whether to raise the bar on regulation of foreign investment in critical materials in order to avoid companies going to China. The other option would be geographical restrictions, but G7 countries were divided," the source added. "These restrictions could include local content rules or limits on sourcing from select countries like China in public procurement tenders." 2 other sources said the group discussed a type of carbon tax or tariff on Chinese exports of rare earths and small volume metals based on the percentage of non-renewable energy used in their production. So my big question here with all of these solutions is, at the end of the day, manufacturers are going to have to pay more for their raw materials in G7 countries and in Europe rather than in China. So a potential downside there. If you take your automobile manufacturer, just one more difficulty if you're trying to compete with BYD, for example. And continuing on, we have another article. This is Bloomberg News via mining.com. Trump team eyes Wall Street tool to add clout in critical minerals. And just a line, the Trump administration is looking at adopting a tool more familiar to Wall Street than Washington, as it seeks equity holdings in producers of critical minerals to bolster supply chains deemed essential to national security. All to say, it looks like the administration in the United States is looking to continue doing what they did with MP Materials, of course, making the $400 million investment and taking equity. Perhaps we could see this as a replacement or a substitute for subsidies. And as a result, Lithium Americas soars 90% as Washington considers stake. So now we're starting to see speculation as to which companies are now going to receive government support or where the government is going to take an equity stake in these miners. And just a line here, late Tuesday last week, Reuters cited two people familiar with the talks who said the administration is considering the stake as part of negotiations over a $2.26 billion Department of Energy loan for the company's Thacker Pass lithium project in Nevada, the largest planned lithium mine in the Western Hemisphere. Canada-based Lithium Americas said on Wednesday it was in discussions with the U.S. Energy Department and General Motors over the Thacker Pass loan. And final few headlines here. China signs deal with Zambia, Tanzania for $1.4 billion railway upgrade. This is Reuters via mining.com. So just a couple of weeks ago, we saw the CEO of the Libido Corridor project come out and say, our train's going to be way faster than any other train that's coming out of Central Africa. And here we are 2 weeks later. China, Zambia, and Tanzania on Monday signed a $1.4 billion deal to refurbish the Tanzania-Zambia Railway, a vital route for shipping copper exports from the region, Zambia's government said. The deal aims to rehabilitate the railway and purchase locomotives, passenger coaches, and wagons. And finally, an interesting headline out of India.com. Major setback to India in Myanmar, plans to defeat China halted. What's Modi government's next plan? Once complete, Mizoram railway project is expected to boost India-Myanmar trade. So now India wants to build a railway into Myanmar, and they have shown quite a lot of interest in their rare earths. And as we saw in the South China Morning Post last week, this indeed could lead to pushback from China. As it says, India's project to source rare earth elements from Myanmar appears to be in trouble, mainly due to the country's internal turmoil. The lack of railway and road connectivity from Myanmar to the Indian border is a major obstacle to transporting these critical minerals. As the article says, it is the fighting that is preventing this railway from being built. So lots going on here, and we haven't even discussed Freeport-McMoRan's Grasberg complex in Indonesia. So that is coming up next. Coming up this episode, we have Henry Lazenby, Western editor at the Northern Miner. He attended the Precious Metals Summit at Beaver Creek and Mining Forum Americas at Colorado Springs, two big landmark conferences in the mining calendar in September. So we hear his thoughts and reflections on what is being discussed, the sentiment at these conferences, and it is quite interesting. Maybe not exactly what you'd expect. So a great interview coming up this episode. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. Turning to the website, Indonesia halts Grasberg operations to search for trapped miners. And this is by a staff writer at mining.com. Indonesia's government has reached an agreement with Freeport-McMoRan to halt operations at the Grasberg mine and prioritize the search for missing workers following a landslide incident, Reuters reported. Earlier this month, a large mudflow left 7 workers trapped at the Grasberg Block Cave underground mine. 2 of the workers have since been found dead, but the rest remain missing. So a big tragedy over in Indonesia at the massive Grasberg mine. The mine, the second largest copper producer globally, is operated by Freeport Indonesia, a joint venture between the Indonesian government and Freeport. On Wednesday, the U.S.-based miner declared force majeure at the underground mine, which holds half of Freeport Indonesia's reserves and is expected to supply about 70% of its copper and gold output through 2029. Speaking to reporters, Indonesia's mining minister Bahlil Lahadalia confirmed that the mine has not resumed since the incident, with the suspension impacting both output and revenue. Asked when operations would restart, he said the Indonesian government and Freeport would discuss the matter. He added that the parties have also had talks on extending Freeport's mining permit beyond 2041. Freeport did not immediately respond to a request by Reuters for comment. Scrolling down, Olga Savina, a commodities analyst at BMI, a Fitch Solutions company, said, quote, "The copper market has been and continues to be jolted by supply-side issues this year. We expect any prolonged supply setbacks to further strengthen the bullish narrative for copper throughout the remainder of this year and possibly into 2026. And we have another story. This is by a staff writer at mining.com on September 25th. Goldman lowers copper supply forecast on Grasberg disruption, sees deficit in 2025. Goldman Sachs has lowered its global copper supply forecast for both 2025 and 2026, citing recent disruptions at the world's second largest copper mine. Production at the Grasberg mine in Indonesia has been under suspension since September 8th after a landslide unleashed 800,000 tons of mud into the block cave area, trapping 7 workers and causing severe damage across the mine's infrastructure. Scrolling down, the setback has dealt a crucial blow to Freeport as Grasberg accounts for half of its proven and probable reserves and 70% of its projected copper and gold output through 2029. Shares of the Phoenix, Arizona-based miner have fallen by more than 21% since its update and are now trading at levels last seen during the April market turmoil. And we also have a column from Reuters, further illuminating the significance of this story. Grasberg disaster highlights fragility of copper supply chain. And this is by Andy Home. The copper market is long accustomed to unexpected supply hits, but the catastrophic events at Freeport-McMoRan's Grasberg mine in Indonesia are unprecedented in terms of scale and potential impact. Grasberg is the world's second largest copper mine after Escondida in Chile. Last year's production of 815,000 metric tons represented 4% of global output. What happened on the night of September 8th in the block cave part of the mine was the stuff of nightmares. A colossal 800,000-ton mud rush erupted into the mine, traveling rapidly to multiple sections and blocking access routes. 2 workers were killed. All mining activity has been suspended while the company works to locate another 5 missing personnel. Freeport's best guess is that Grasberg may return to pre-accident operating rates in 2027. It's a big hit to an already stretched supply chain, which is why the London Metal Exchange copper price jumped to a 15-month high of $10,485 per ton when Freeport declared force majeure last week. And scrolling down, the Grasberg incident changes copper's global supply landscape. BMI has widened its expected 2026 market supply shortfall from a marginal 72,000 tons to 400,000 tons. Citi has also revised its global market balance estimates and projects a similar size deficit in 2026 and a potential further 350,000-ton shortfall in 2027 unless prices rise significantly to incentivize more supply. Scrolling further down, Grasberg is a third major incident this year. Ivanhoe Mine's Kakula mine in the Democratic Republic of Congo was hit by seismic activity and subsequent flooding in May. The company is still in the process of pumping water out of the most affected section. State Chilean producer Codelco experienced a tunnel collapse at its El Teniente mine in July, resulting in 6 fatalities. The causes are still being investigated. So, a vulnerable market there. And finally, Bank of America projects copper price to surge past $11,000 in 2026. This by a staff writer at mining.com. Bank of America has raised its copper price forecast, pointing to widespread mine disruptions and steady demand for the metal across global markets. The bank now expects copper to average $11,313 per ton in 2026 and $13,501 in 2027. Strategists forecast a peak of $15,000 per ton, or $6.80 per pound. So interesting developments in the copper market. Turning to aluminum, Alcoa to shut Kwinana refinery take $890 million hit. This is Reuters via mining.com. Aluminum producer Alcoa said on Monday it will permanently close its Kwinana alumina refinery in Western Australia and take a hit of $890 million in the third quarter related to the closure. So a permanent close of a alumina refinery in Western Australia. The refinery's current workforce of about 220 employees will be reduced through 2026 as the closure progresses, while some will stay on further to prepare the site for future redevelopment, Alcoa said. And we have a quote from Matt Reed, Executive Vice President and Chief Operations Officer for Alcoa. Quote, Alcoa operated the Kwinana refinery for a number of years in a challenging environment and made the difficult decision to permanently close the facility after unsuccessfully exploring multiple options for a sustainable path to restarting. Continuing on, and another tragedy here, this one quite large. At least 100 feared dead in northwest Nigeria gold mine collapse, locals say. This is Reuters via mining.com on September 26. At least 100 people are feared dead following the collapse of a gold mining pit in Nigeria's Zamfara state, survivors and residents said on Friday. The pit at the Kadawari mining site at the Maru local government area caved in on Thursday while scores of artisanal miners were working underground, witnesses told Reuters. Rescue operations continued into Friday. Sanusi Awel, a local resident involved in rescue efforts, said at least 13 bodies had been retrieved from the rubble, including that of his cousin. Quote, over 100 miners were involved during the collapse, Awel told Reuters by phone. Quote, we are lucky to be rescued alive. Out of more than 100 people, only 15 of us were rescued, said Issa Sani, who is currently receiving treatment for injuries. Muhammadu Issa of the Zamfara State Miners Association confirmed the incident, adding that some rescuers also suffocated while trying to dig out victims. So, awful story out of Nigeria. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.13%. That is down 0.01% on the week, so barely lower. The yield on the UK 10-year gilt is unchanged at 4.71%. The Italy 10-year bond is yielding 3.56%. That is also down 0.01% on the week, so barely lower. France's 10-year bond is yielding 3.53%. That is down 0.03% on the week. And the German 10-year Bund is also lower, yielding 2.7%. That is down 0.04% on the week. The Japanese 10-year bond is also lower, yielding 1.64%. That is down 0.01% on the week. And China's 10-year bond is yielding 1.86%, and that is down 0.02% on the week. Turning to precious metals, gold is trading at $3,882.10 per ounce. That is $59 higher on the week, so the rally continues in gold. Silver is trading at $46.91 per ounce. That is $2.71 higher on the week. So the rally in gold and silver continues. Platinum is trading at $1,607.20 per ounce. That is $184 higher on the week. And palladium is trading at $1,262 even per ounce. That is $65 higher on the week. So precious metals rally. Turning to industrial metals, copper is trading at $4.83 per pound. That is 35 cents higher on the week. Iron ore is trading at $105.44 per metric ton. That is 5 cents lower on the week, so basically even. Aluminum is trading at $1.22 per pound. That is 2 cents higher on the week. Lead is unchanged for the third week in a row at 91 cents per pound. Nickel is trading at $6.95 per pound. That is 4 cents higher on the week, but still below $7. Tin is trading at $15.65 per pound. That is 15 cents higher on the week. Cobalt is also higher at $15.88 per pound. That is 21 cents higher on the week. And lithium is trading at $10.33 per kilogram. That is 5 cents lower on the week, so barely lower. Uranium is back above $80 at $82.50 per pound. That is $6 higher on the week. And zinc continues at elevated levels at $1.34 per pound. That is 2 cents higher on the week. Zooming out, precious metals steal the show, while industrial metals trend sideways with copper and uranium showing strength. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner podcast, Henry Lazenby, Western editor at the Northern Miner. He attended the Precious Metals Summit at Beaver Creek and Mining Forum Americas at Colorado Springs. We discuss the sentiment and Henry's reflections as precious metals hit elevated levels. It's a very interesting discussion. And again, not exactly what you might expect. So I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Henry Lazenby, Western editor at the Northern Miner. Henry, welcome to the show.
Hi, Adrian. It's a pleasure to be back.
It's always wonderful to have you, Henry. You're always doing interesting things, and you started off what I want to call the new year here in September with a couple of conferences. You went to the Precious Metals Summit in Beaver Creek. You also went to Mining Forum Americas in Colorado Springs. So tell us, how's your month been? What are your general impressions here after coming back and visiting these two big shows in the mining calendar?
Yes, Adrian, it certainly does feel almost like the new year, just in terms of how busy we are. It's the annual trek down to Colorado. As you rightly pointed out, the Beaver Creek conference called the Precious Metals Summit. They're high up in the mountains. It was a good start. And then the next following week down in Colorado Springs, that Mining Forum Americas. Great opportunities to interface with the industry, big to small, the explorers, developers, producers, and the majors. We interface with all of them. Some key takeaways really entail the market is approaching that frothy stage with a marked influx of new investors we haven't seen at the shows before, are asking questions and introducing themselves and getting to know some of the key players in the industry. And there were a marked optimism, but ironically enough, not really that euphoria that one might expect yet. It seems like capital discipline and just a disciplined telling of their respective narratives really were in the order of the day. So many of them being optimistic that there's more room for metal prices to run, but cognizant of the fact that the industry is still, in a way, atoning for many of its sins of the past decade, when in similar bull runs, they chased volume growth over quality growth. And so the focus very much was on quality production rather than growing for the sake of showing more ounces on the balance sheet.
You know, it sounds like an industry that's been traumatized, really, from the last, probably 15 years. You could almost go back to 2007, 2008, since we had the last really booming bull market in the metals. And it's almost been 20 years when you put
Absolutely.
it all down. So perhaps people are ready for the bottom to fall out. It's understandable that there'd almost be a sense of worry. So super interesting. Okay, so the Precious Metals Summit, this is more oriented towards, say, explorers, smaller companies. Tell us about Beaver Creek. Was there a big theme? What were people talking about?
Yes. So one of the key takeaways I took from there was that in the telling of their stories, companies and CEOs focused very much on near-term, palpable action items, such as speaking to investors who really have an appetite only to fund developers that have a clear path towards production in the next 12 to 24 months. People who were able to present numbers that are updated, not a 2022 capital estimate for a project that relies on vendor quotes that are outdated, as we might have actually seen there as well. So that was an interesting takeaway. Management teams also brought this that, there was a lot of talk about how to fund growth prudently. Nobody really has an appetite to issue equity to fund growth in full. There are some novel financing models doing the rounds there. The royalty streamers, the metal streamers were in the halls looking at deal opportunities. And boards try to avoid large dilutive equity rounds, especially the concept being that despite there being new investors doing the rounds, and we've seen some large investments from new players, such as stable coins, such as Tether in the past few months, making huge investments of like $100 million plus US into the sector, but they are still quite cautious. Another element of the storytelling that I noticed was that exploration pitches only really landed when companies were talking about step out meters tying directly to a potential starter pit or underground access for a bulk sample or perhaps near-term resource upside. Those kind of arm-waving stories that the sector is known for, saying, there's regional blue sky exploration upside, they were a hard sell and really landed on a non-receptive crowd. So in that vein, perhaps some of the red flags that I picked up were, that lost the room completely were vague power plans and vague gestures as to, where their water access will come from or whether they are engaging with First Nations and host communities rather than showing what they have already done to truly engage and improve the lives of those host communities. Those are really the things that matter to help catalyze projects forward.
It's so interesting. It almost speaks to this whole notion of a traumatized industry in the sense that people,
correct.
Right? Like it's like people have been burned so badly, really,
Yes.
with investing in explorers that they are just like, they're just not there yet. It sounds like, I mean, amazingly, and I guess it's important to mention, this was September 10th to 12th. So this was before, in a sense, the last, run up in gold prices. So that's also important to mention, right?
Absolutely.
And
And
so,
also the run in copper we've seen this week.
right, with just the last, few days there with these closures, these force majeures. So just to clarify, though, interestingly, it sounds like there's still a certain amount of difficulty for explorers to raise money, or at least like it's not like the taps are completely open here.
Yeah, it seems like that, but it's exceptionally hard to really tell. I unfortunately don't have a crystal ball, and I don't think anyone there really has. So, as I say, the mood really is optimistic, definitely palpably more optimistic than prior recent years. But also, as I mentioned, you couldn't really feel that sense of euphoria yet. I think people really are cognizant that given the new set of investors now showing interest in the industry, it's so much more important now to make the right decisions and to not make decisions that will result in a slew of balance sheet write-downs we've also witnessed in the past.
So this is the Precious Metals Summit. So does that mean that only precious metals were discussed here, or did it include other metals as well?
Yes, no, there was certainly talk of other metals. A key buzzword at both conferences was silver. Given gold's bull run and analysts expecting gold has more space to run, some even suggesting we'll see plus 4,000 gold before the year is out. People are also extremely bullish on silver for its lag and then potentially catapulting move 3, 4, 5 times that in relation to gold's move. So that lag is now in play. We have seen the silver price rising above $42, and it appears to be inching higher still. Some people have forecast prices of $50 per ounce soon. And then there are your extreme bulls who guide for a real value for silver really falling somewhere between $100 and more, even 120, I've heard. So those are extremely bullish cases. Don't make your investments on this. This is not investment advice. It's just interesting to note. Another buzzword I picked up, of course, is antimony. There are several developers that have jumped on the antimony bandwagon since its inclusion in the US and in Canada as a critical mineral essential for military manufacturing applications. So anybody who has a smidgen of antimony in their reserves or resources are touting that pretty aggressively at the moment. Some analysts I've spoken with even cautioned that that's a bit of a red flag at the moment. Like if they are so eager to pivot to a non-core metal for their project, then you have to start considering, is the core metal perhaps its goal? Are the elements making that project, are they really strong? The fundamentals there. So it's some food for thought. Of course, copper also is in vogue. The fundamentals are super strong at the moment. The global market is extremely tight. And following the last 2 weeks' conferences, we've seen just this week the Freeport McMoran Grasberg mine experiencing a mudslide there and forcing a closure. It's considered the second largest copper producer globally. And then also yesterday, on the same day, Atbay Constancia mine declaring force majeure due to unrest there in Peru. And so it's all on top of mind for the explorers, developers, and producers. There really is several other minerals that are making a run for record price.
Super interesting. It's just a gigantic story. It's just now one metal after another. They're taking their turns here. First it was gold, then it was silver, and now it feels like copper is next in line. Now, in terms of the, say, royalty streaming angle, is that still a thing? Is this still popular? Is it discouraged? Like, did you get a sense of that from the conference?
Yes, absolutely. The royalty and streamers are very much in attendance, and there's a proliferation of them kicking the tires, if you will, on new potential deals. During the 2 weeks, we've seen a blockbuster deal being announced, really, with Wheaton Precious Metals, the inventor of the metal streaming model, really, backstopping Barrick's sale of the non-core Hemlo gold mine there in Western Ontario to a new player led or advised by Robert Quartermain. That was a $1.1 billion deal for which Wheaton really backstopped around $400 million. So that's a major deal. Point being that the streamers are very much in vogue at the moment, especially because the mining sector as a whole is still lagging in valuations, and especially the lower down the tiers you go, the more the lag in valuation really is. And so issuers are extremely hesitant to issue any equity at this stage, hence creating a huge opportunity for the royalty and streaming companies. I also interviewed David Garofalo of Gold Royalty Corp, who just reported record cash flows. They are now officially in their first year of positive cash status, and they'll be, all things equal, debt-free within 12 months. And he's got a lot of cash on hand to look for and close new deals. Randy Smallwood also said they've got about $2 billion plus available, $1 billion in cash alone, with which to, firepower available to look for and close new deals. And I mentioned the latest example there. So all the streamers are really looking in great shape, and there's more to come.
And so anything else on the Precious Metals Summit before we move on to Mining Forum Americas?
Yes, I guess investors really wanted to know about near-term catalysts, updated resource statements before year end, clear permit timelines and filing dates for these permits, the timings of feasibility studies, and what the treasury and funding steps entail to get to their next value catalyst. Those were the order of the day, and those were great questions. So it really means the investor base have been listening to perhaps your podcast or reading the Northern Miner, taking some of the advice we've been sharing over the years. The point being, markets really pay attention to execution, and promises without those priced in power, water, and vendor quotes didn't pass muster. Inflation discipline was top of mind for everybody. Please bring updated project economics to us. Don't come with outdated stuff. It's not going to fly. Permitting is top of mind. It remains one of the strongest aspects investors look at. It can make or break projects. And then there is a pivot to tier one miners, the majors. They really want tier one jurisdictions, and they're looking for open pits. Those seem to be the sweet spots for them. And then there's a lot of talk about those few at Beaver Creek who have been producing cash, who are in production, about how do they spend their money best? Is it best invested back in the business, or is it best returned to investors to help entice this new generation of interest, help maintain that and grow it? So it's really a tightrope act for these decision makers.
Yes, more money, more problems, as they say.
Yeah.
So, Mining Forum Americas, how is it different from Beaver Creek? How would you contrast it, in a sense, with Beaver Creek?
So at the Mining Forum, it's where the producers gather and the majors present to investors and institutional investors at large. At the Mining Forum, operators really dominated the stage and framed guidance around free cash flow and discipline. I picked up that most talk about phased builds and around modular expansions rather than single or large development decisions for projects. The model answer was really to reuse existing plants, hold capital returns steady, and advance one or two core growth nodes with short paybacks. Obviously, the darling of the show was when Barrick Mining's CEO, Mark Bristow, published on the third day of the Mining Forum the 4 Mile Gold Project's PEA, updated preliminary economic study, and it stole the show, really. He labeled that discovery as a generational discovery, the best in the past 100 years. That 4 Mile project is fully owned by Barrick, and it has the potential to produce up to 750,000 ounces a year at a modest capital outlay of about $1.5 to $1.7 billion. But the upside to that is it can produce at below $1,000 per ounce, even lower than 850, Mr. Bristow told me. So let me just be clear on that. The all-in sustaining cost comes in at below $650 per ounce. So clearly a lot of upside there. It's the envy of the industry at the moment. There was also a message to expand without stretching the balance sheet, similar to Beaver Creek, while maintaining those cash returns. The majors are able to do that. They strike a balance between returning cash, investing in securing future ounces and replacing depletion. And then the core risk really remains in execution and the underground performance and grade control. Very key in these operations.
Did Bristow tell the audience or you how they made this discovery? Like, was it using newer technology or was it just kind of straight up drilling? Did you get any insight on that?
We didn't go into the discovery story per se, but Bristow and Barrick has a long-standing history operating in Nevada's Carlin Trend, and they really have secured and staked and acquired, assembled really, the best land packages in the region, covering multiple and even cross-cutting gold districts. And so they were onto this. 4 Mile has been known to be around for quite a while. It's a function of them being very confident in the region. And of course, the Gold Rush project, which is currently under construction by the Nevada Gold Mines joint venture between Barrick and Newmont, is right next door. So it's really an extension of that ore body. And it seems like the company has really only gotten to understand that in recent years, with the PEA now showing the way forward to a really cash spinning machine as soon as it starts production, hopefully before the end of this decade.
And just very briefly, I mean, was there a sense that Newmont was, I don't know, a little miffed or disappointed, or like were they unhappy at all with this? Or was it just like, well, it was outside of the Nevada Gold Mines joint venture, so it is what it is?
Newmont has been undergoing its own transformation in recent years. Since the Newcrest acquisition, it has been paring down its portfolio, right-sizing it, divesting non-core assets. And now it says it's in the final stages of that process, and it is in fact letting go quite a number of staff members as the final prong to that process. There is talk about potentially down the line adding the 4 Mile project into the Nevada Gold Mines fold, but what form or shape that deal will take is up to anybody to guess at this time. Bristow did tell me in our interview that he would expect the partner to pay its fair share of whatever they'll get.
Right. Okay, excellent. Very interesting. And so, as we're wrapping up here, Henry, where is all this going? Was there a sense of where this industry was moving with all of the huge developments that have been taking place in the last few months?
Yes, I've got quite a few takeaways to share. And if you permit me, I'll reach back to the Beaver Creek as well. One of the articles I wrote from there featured Frank Giustra and how he proclaimed that the era of paper gold is over as the BRICS formation is building dollar-free payment networks that really counters the dominance of the US dollar as a trading currency and really feeds into the de-dollarization narrative and the pivot to owning hard assets. Giustra, as a member of the Canadian Mining Hall of Fame, said that it basically puts the SWIFT network back into the Stone Age, the way that the Chinese and the Russians, Indians, South Africa, and Brazilians, the BRICS trading bloc, is standing up this alternative international transacting network. Of course, that bodes very well for gold because those alternative networks are pegged to gold and backed by gold, and it's very foreboding in a way. I would also say markets pay for funded execution. Again, promises without priced power, water, or vendors don't pass investor scrutiny. Lots of questions about inflation, discipline. I also wrote a very interesting story, if I may say so myself, about Sir Neil Ferguson, a global historian that was talking about Trumponomics and gave us his take on what the next global crisis might look like. And he squared his talk really upon should this de-dollarization narrative continue and strengthen. And given the Trumponomics playbook that's based on 10% base tariffs, plus the reciprocal tariffs, a weak dollar tilt, and rising a great power risk internationally, it could be that China senses a weak America and, they really are eager to take over Taiwan and exit as their own. And of course, Taiwan has an outsized concentration globally as a producer of silicon chips. And so he likened such a move as potentially equal to the 1970s oil crisis that was a product of the Israeli war, and how it would not be oil that is the linchpin here, but silicon chips. And that would really set the stage for a realignment of mining supply chains. And it also points to more upside for gold. As I mentioned, the majors, they are hunting for acquisitions and accretive reserve replacement buys, but they tend to favor the top jurisdictions like Canada, the US, Australia. And those acquisitions of recent times really tend to be open pits, which is almost counterintuitive since we've seen a trend that developers tend to favor underground at the moment just for the relative ease of permitting, which, as I've mentioned, is top of mind for people.
I mean, Niall Ferguson showing up at a mining conference, there has definitely been a shift in the
Yeah,
market here.
absolutely. Absolutely.
That is a head turner.
Yeah, another takeaway, of course, again, I have mentioned this, but the gold majors, one after the other, vowed continued discipline. And in fact, that'll be our cover story for the October print edition of the Northern Miner, where one after the other, Franco-Nevada, Barrick Gold, Newmont, Agnico Eagle, they all vowed to really de-risk projects and get that next leg of production up from smaller but better mines.
It sounds like the discipline is there and lessons have been learned from the prior cycle. Henry Lazenby, Western editor at the Northern Miner, thank you so much for sharing all of your journey and your perspective on these two conferences in the U.S.
It's my pleasure. Thank you very much for having me back again, and I'll look forward to joining you again soon.
Thank you once again to Henry Lazenby for appearing on this week's podcast, and thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.